You guys hear me? Awesome. Good afternoon. What is it? Good evening. I'm not sure what it is. But Gabby, thank you for coming. Jason Karibuni, you just arrived from Nairobi, so thank you for having you here. Everybody, this is about Web 3.0 and Metaverse. That's what we're discussing. So Gabby, please tell us what you do, about your company and what you're investing, and you can go from there.
Awesome. Thanks for having me. And hi, everyone. I'm Gabby Cazeau. I'm a principal at Harlem Capital. We're an early stage venture capital fund that's on a mission to change the face of entrepreneurship by investing in 1,000 diverse founders over the next 20 years. So originally started in New York. Our whole team is now remote, and I'm actually based here in DC. So welcome to town. It's been great seeing everyone here. As a fund, we invest at the pre-seed and seed stage in the US, Africa, and in Latin America. Today, the topic is Web3. We've invested in 5 Web3 companies since starting focusing on the sector early last year. So that's been really exciting and looking forward to sharing more of our thesis. Otherwise, we, invest $1 to $2.5 million in pre-seed seed rounds. And yeah, excited to chat today.
Jason?
Thanks so much. You guys can hear me? I'm Jason Eisen, founder and CEO of Utu. We're based in Kenya. We are a startup, not an investment firm. We focus on trust infrastructure for the internet, basically decentralized, privacy preserving, incentive aligned infrastructure to help people interact across the internet, across Web3 safely and confidently. My experience on this panel is maybe slightly different from Gabby's, coming in as a Web3 founder. I've invested personally in some Web3 companies around the continent, and late last year, started the Africa DAO as a channel to basically move more global eyeballs and capital into African Web3 projects. Essentially, I spent most of the fall on a road show raising money for my own company across crypto conferences around the world, and constantly was bombarded by the statements, Africa, where crypto goes to win, Africa, where blockchain goes to win. And then I'd ask inevitably, oh, so you've been? No. So you're working? No. And so you're familiar with the projects that are? No. So you're just saying things to say them? Yes. And I realized, wow, we have this incredible African Web3 ecosystem of people building revolutionary technologies. And then we have this whole global crypto Web3 ecosystem of people talking a lot of ish. And how can we connect these two sides and see that there's actually more things happening on the continent than the global crypto scene really is aware? And so that was the genesis of the Africa DAO. And then also started another DAO called Eat Safari, trying to, again, build these relationships. It's not just about the capital, it's also about the networks and relationships and meeting people. So we're holding the first Ethereum event on the continent later this year in Kenya in September, called Eat Safari.
That is great.
So that's a bit about me.
No, that's a lot of stuff going on. Gabby, your company just invested in a NFT-based company, Glow. What else, what's Glow? What are you doing with them? And then what other companies are you looking to invest in terms of this?
Yeah, we're super excited about Glow Labs. So we first met the team in December. It's 2 amazing women founders with some great technical experience. We're formerly at JP Morgan, but personally just had a passion for Web3 and NFT projects. And so one of the founders was launching her own NFT project. And that's really when she started running into the core problem that Glow is solving. So they built this NFT project. They sold, the NFTs to folks in the community. And as with any NFT, that's sold on and built on Ethereum, those folks in the community had to pay gas fees, i.e. the transaction fees to purchase the NFTs. And that to them just seemed kind of off. Like, why are we going to make our community pay more money? Let's try to give them that money back. Let's reward them back with dollars from our treasury. But there wasn't an easy way to actually do that. How do you actually give all of your consumers and folks in the community gas back? And that really started and spawned the idea of thinking about, okay, like this is just our NFT project, but what about all of these other creators who might be technical, who might not be technical, or even businesses that want to launch NFT projects or, DAOs or whatever it is, and want to reward folks in their community, and effectively building this new loyalty solution. And so Glow Labs is a loyalty solution that's white labeled, no code tool for businesses and creators to reward and give value back to the members of their community who opt into their project. So today, starting with NFTs, but eventually, becoming like, what is this global home and CRM to understand who your community is? Because I think the beauty of it being in Web3 and everything being on the blockchain, you can see that your community has purchased your NFT, but maybe some others. And what other products or services can you build on top of understanding them from that lens? So really building like a novelty loyalty solution on the blockchain.
And that was the whole thing. I think a lot of people, want to get into this NFT business. Oh, I want to create my own NFT here. I want to do this. There is an underlining question and an underlining understanding needs to have, which is the entire NFT is running on a blockchain type of scenario. When you are using Ethereum, like you said, you're paying gas. When you're using other products, and there's this whole concept of public and private. So there's a lot of conversations that go around this. What do you, when you're looking at investing in a company, do you have a specific flavor of product or protocols that you're looking for? Are you just like, oh, you're another Web 3.0 company, let me see if I can add you into my portfolio?
Yeah, no, we try to be a little more focused than that. I think we try to step back, and it's less about the specific protocol, right? I think the protocol, the founder should really be picking like what's going to be right for the business, and it's not necessarily our place to say. For us, it's a little bit more thematic, and we think about like what are the big trends and reasons why people are building in Web3 and where Web3 is going to be valuable. And we see it in kind of three main sort of like broad brushstrokes. The first one being collaboration. So we're on a decentralized blockchain, decentralized ecosystem. What might be the new ways that people can work together, or new ways of credentialing and proving that someone has the skills to do X, Y, Z, given what they've done before and it being recorded on the blockchain? What does ownership look like in this new world where it's tracked and recorded, but also you can prove that you've created something of value and you want to be rewarded for that value later on. And I think that ties back to wealth creation, thinking about creators in the NFT space in particular. You sell one NFT, you get paid for that, but then what do secondary and tertiary sales start to look like? And how do creators then own more of the value that they create for their audience and community? So we think about those three as sort of like the high level themes. Within that, I think we're really interested in like, what do on-ramps and off-ramps look like, between Web 2 and Web 3? What might B2B solutions look like for businesses like what Glow Labs is creating, and creator tools and things of that nature?
And Jason, on the same note, from an Africa perspective, in Kenya, there's crypto clubs and coffee shops, people talking about cryptos, and that now is going to start changing into NFT, but still underneath it, technically you are using cryptos. Where do you see, from a content perspective, where's crypto going, or where's NFT and Web 3.0, where is it going?
A lot of different directions. The nature of decentralization, I guess, it's going to branch in as many directions as it can possibly branch in. I guess the directions that I'm really interested in, I always talk about being a fan of technologies that embrace our humanity rather than replace it. Things that make us more human. My own companies have followed that approach. But at the end of the day, we're not really ready for a lot of the really beautiful, seamless consumer value propositions that can be built in Web 2 now. Because they're built on 20, 30 years of layers of infrastructure on infrastructure that allow you to roll out those really beautiful, magical value propositions. So we're still not there. I think there's a huge amount of base level, second level, third level infrastructure that has to be built, on-ramp, off-ramp infrastructure, whether that's, on the continent, that's mobile money to crypto, on-ramping and off-ramping. It's one of the companies I've invested in and I'm on the board of, called Bitlipa, that's trying to do Pan-African mobile money to crypto on off-ramp. On the same token, we recently actually announced this morning something called the Africa DeFi Alliance, which is meant to, we set this very audacious goal of moving $100 billion of working capital into the continent at transformational rates. These are things that value proposition is essentially closing an arbitrage between 0.05% interest rates on retail savings in the US and 360% interest on a small micro loan in Kenya. And so, for instance, we've done some pilots with one company that I'm involved with. We've done about $10,000 in loans, about 270 loans that have been offered to transportation workers through a taxi app, 100% loan uptake, 100% repayment. And we beat the market rate for interest on interest rates by about 10x what was previously available to these guys for the same exact loan. And so then you ask yourself, where was that money going between the 0.05% interest that I earn as a retail saver and 360% that I'm paying as a borrower? Because that doesn't accurately reflect the cost of the loan or the risk profile. So you're wondering, like, these arbitrages are there not because this loan is too risky, but because there are centralized actors that have a lot of control and they can basically charge whatever they want. And so those inequalities and arbitrages are going to be evened out by a lot of these technologies that can trustlessly connect people here, money here, capital here, searching for yield to borrowers across the continent. I mean, I think the World Bank says it's like a $330 billion SME finance gap on the continent. And I'm wondering, well, with 10x cheaper capital, what kind of outcomes can we create or transform with these value props? And, you know, we talk about the next billion users in crypto. They're probably not even going to know that they're crypto users in many cases. They're going to interact with the things they want to interact with. A lot of the technology should and will be under the hood in the background, transparent to the user, because what do they care? It's just another.
I totally agree with that. I think at the fund, we think a lot about, like, what does this Web 2.5 space look like? I think the last panel framed it really well, where it's like a fintech application layer front end that users are used to. But the rails are all on crypto, on protocols and different blockchain systems, and a user will never know. But you get to benefit, you know, sort of the best of both worlds.
I'm very skeptical, though, sometimes of that approach from big institutions from the current world, because I'm wondering, well, you could have created some of these value propositions yourselves previously. You didn't. Why are we trusting that you're now going to create them? And why are you being dragged into this? Like, I'm definitely a decentralist, and I'm looking at central bank digital currencies and they look like wolves in sheep's clothes. And I'm looking at Citi and I'm thinking, are you really into decentralization, or are you into Citibank?
Yeah.
And this looks like the next frontier. So I think there's a lot to create,
so,
but I'm skeptical sometimes.
So one of the things that and this is a term that I learned in Africa. Africans are property rich, money poor. So if you look at it, most people, you know, whether it's in Kenya or, you know, Uganda or Ethiopia, wherever, people buy houses and buy properties cash. They don't go out and get loans. But every quarter there's a crisis, which is they have to pay school tuitions, they have to pay this and that. And then they're going out to loan sharks to a 300% interest rate. And if you don't pay, you get kicked out of your house. And what I see with Web 3.0 is that whole concept of, oh, I can take my house or I can take my property and tokenize it and make money, you know, to pay my bills, and then in return pay, you know, less amount interest to the money that I borrowed instead of 300%, right? And then that's one aspect I see how this whole Web 3.0 could be used on the lending side of the house. The other thing I see is the whole cross-border payment concept of it, which I don't think we have really tackled properly yet. And there's a lot of companies talk about it, but I haven't seen any that's doing. And what do you guys see on that space?
I think we've seen more, at least from an investing perspective, on the cross-border payment side. I think it's to your point, one of like the areas of like low-hanging fruit. Like, it is the known pain point. It is the thing we know crypto can solve. And so there is a bit of a race around who will solve it first. But I do think, at least from what we've learned in the market, you know, it's a problem that is felt unequally by each country. And so I think I'm a little skeptical around sort of like the timing for like when that will really be adopted. But again, I do think where it will be adopted is in that sort of like 2.5 space. I don't really believe the whole world, and I guess I'm, on the other side of the spectrum, will, become fully decentralized. I think maybe at the bleeding edge and maybe for a certain group of users, but by and large, I think we'll still need some of these core intermediaries to kind of navigate.
So to one other question that I was going to ask you, Gabby, is like, what companies are you invested in the continent today, if you are, and what you're looking for to invest?
Yeah, so we just started investing on the continent in the fall. So the first investment is in a company called Parity. They're a solution for any startup that's looking to raise capital, helping get them ready to meet with investors. It's a platform that connects them to investors. And then as they raise capital, helps connect them to talent as well, sort of becoming an angel list in a way on the continent. So that was the first. We're continually looking at companies in e-commerce enablement, in fintech in particular, across the continent. Have one hopefully forthcoming, but yeah, we're excited for more.
Maybe Jason.
I know we need to talk to Africa now.
No, definitely. So Jason, what do you see for everybody that's here? What should they be looking for? What kind of investment, if there is any, in the continent? And
okay, I think the really interesting thing with investing in Web3 is sort of the breakdown from some of the old investment approaches and these hard walls between company and community, investor, team, community member. You can be all three roles. And I think there's going to be a lot more people that just invest in things that they identify with, not because it fits their thesis or it's only about returns. We've seen it with people that invest in or buy our token. It's not because it comes back to actually what Ronit was saying about searching for community. And there's this looking for a sense of belonging and wanting to contribute to things that you identify with and that you want to become a reality. And I think you see a lot of that happening now at the retail level, at the fund level. Of course, it's all the stuff that we're talking about, DeFi, things that enable the creative economy, like NFTs. But I guess at the end of the day, the question is, does this thing need to be built in a decentralized way, or is the company trying to leverage the boom in these technologies to push an idea that actually could have been executed more efficiently in a different way? So I think the things I'm most excited about come back to things that are only capable, you can only do in a decentralized context, that are really enabled by these technologies. Anything where you have many to many, where you have many payers and many doers that need to be incentivized. It was really easy as a company, if I want to hire one person, or if I want to do something, I hire one person to do it. I'm one entity, I hire one entity, and we work together. Maybe I could be one entity that hires many entities, or many entities that hire one, but doing many to many was very difficult. And you look at spaces like maybe payments for environmental services. And what would it mean if you could programmatically compensate any single person that planted a tree anywhere in the world by taking all the capital that cares about tree planting and trustlessly transferring it to the people who have seeds in their pocket and are walking around planting a tree? And if you can prove that when they upload that video of them planting the tree, the metadata, this, that, everything is legit, and you can create a revenue stream in a place that there was never a revenue stream. This is what we've done with Utu. How can you create a revenue stream by building trust online, by helping other people get good outcomes? So this idea of creating revenue streams where there were none, where you can use incentives at large scale to drive actions, where you can collaborate. Look at hyperscale DAO, 40,000 people moving in unison towards one goal. And when the founder of the company tweets something, 40,000 people go and retweet it. There's no other investor on the world that can move like that, right? And so there are some value propositions that are just unthinkable from Web2. These are the things that excite me for Web3 investment.
So questions to the audience, if you guys have any questions. I have one question, but it's open to anybody.
The only one that's not shy.
at all. So my question is more around essentially you guys are investing, and one thing that hasn't really been mentioned, even though you're investing, is like tokenomics and how that is really, for most investors at this point, they raised their funds. They didn't talk to their investors, their LPs, about tokens and how they can monetize. How are you guys navigating that sort of actually harvesting the value of the investments? What's that about?
That's a great question. We probably spent a few months last year as we were diving into Web3 companies, thinking about we think about a traditional exit model, like as any good investor, like what is going to be the return on the investment. But that totally changes with a Web3 company that builds creates their own token, has their own treasury. Like, do they even need us anymore? Like, there's a lot of these like existential questions, but also meaningful financial questions. And I think where a lot of the industry has really landed is that investors, say in a pre-seed, seed, or even Series A round, will get their pro rata share of the company's token offering that is available to investors. So typically, say 30% of the pool goes to investors, but that is high, but say 30%. Your investor or an individual investor will never get more than 30% of that pool. And so say about 12% might go to them at max out of their pro rata share of that whole thing. And so I think that's kind of where we've landed. I don't actively know of like examples of people actually, being able to harvest very much from that, unless the company has, that's not a right example. I'd say like a Solana, for instance, their token, grew pretty substantially. What investors will then do is they'll sell off portions of that stake over time because you can't dump it all at once. So I think that's been the core example. Around like the actual economics and tokenomics for the business, I think there's still a lot of like question and answer that still has to happen around like what does that really mean and look like? What's a good question?
For me, I think a lot about, there's a huge body of knowledge that has been accumulated since the ICO boom of 2017 about which token models are legitimate, which ones fall apart. And there's still, that learning process is still happening, but we're getting a lot better at creating token models that can endure. You still see things like Olympus DAO, which everybody was very excited about Olympus as DeFi 2.0. I had a very complicated token model that you probably needed an econometrics PhD to really break it down. And at the end of the day, it's turned out that probably it was a disaster scam token model to begin with, and the economics were not sound. So there's a huge amount of complexity that is being built into these things, I think sometimes to obscure what's happening and make it hard to trace. Some of it is well-intentioned, some of it and just part of the learning journey of creating new economic models. Some of it is totally not, and it's the other thing. I would say things like the Web3 sustainability loop. If anybody's read this, it was written by Trent, pioneered by Trent McConaughey, the co-founder of Ocean Protocol. And it's a pretty proven sound model for a long-term, slightly deflationary token based on some basic economics that are sound. And you start to build up this body of knowledge about token economics. I think that's important. But this question is of like the relationship between equity and tokens is so difficult. We raised equity, then we did a token sale. We actually kept the two things completely separate. We didn't give any of our tokens to our equity investors. And we have a pretty complex model it's definitely hard to figure out how do you actually create value in the right places that reflects the contributions that your investors have put in, but also keeps you on your path to decentralization if that is your goal. Like for Utu, we definitely are on this path to decentralization, but we have equity investors, of course, that need to be rewarded. But these things aren't mutually exclusive. I expect Utu, the centralized portions, to run basically in perpetuity an API that will charge fees and generate revenue for the centralized part of the company alongside and in parallel to the decentralized. So there's definitely that model of breaking off some of your token pool for your equity investors, but I think there's other models too, and keeping these things separate, recognizing the roles that people play.
Can you repeat that Trent guy's name?
Trent McConaughey from Ocean Protocol, the Web3 sustainability loop, it's called.
All right, I guess that's about it. Thank you, panel, for joining us. Definitely learned a lot, and looking forward to more exciting news.
Awesome. Thanks for having us.
Thank you.
Thank you very much. Thank you very much, Mussie, Gabby, and Jason. Very much appreciated. This concludes the panel session in this breakout room. Now we have what we call it a new venture competition in the auditorium. So let's move on to the auditorium. We have 6 startups pitching in front of investors. And we will have some announcements. Afterwards, we'll have happy hour and music in the foyer area. Thank you very much.